Retirement Podcast, where we share real-life stories and strategies that we've used to help hundreds of families retire with confidence. Your host is Certified Financial Planner Jim Cox of McCarthy Cox Retirement and Estate Specialists. McCarthy Cox embodies small-town midwestern values and is dedicated to building better tomorrows.
Welcome, everybody, to another episode of Toast to Retirement. My name is Jim Cox. I am the managing partner of McCarthy Cox here in Marysville, Ohio. With us today is Megan McCarthy Collins. She's been my business partner for 3 years, a little over 3 years, I think now. And with McCarthy Cox, we're talking about that for 8 years now.
8 years.
And the reason Megan is with us today is we're going to talk about Ohio Public Employee Retirement System and the STRS, the State Teachers Retirement System. And Megan, tell us kind of your background in the public servant space.
Yeah, so I went to college for finance and political science, but after graduation, I did a small stint of time with the AmeriCorps Vista program, like the Peace Corps, but with domestic service. And then from there, I went and worked at Nationwide for about 7 years. I spent the majority of that time working with public employees with their deferred comp, their 457B plan. So it's the extra supplemental retirement account available for folks in public service. So from teachers to firefighters, police officers, sheriffs, county employees, city employees, the whole gamut.
So you were a consultant, you were telling me just nationwide on public retirement plans.
Yeah, so I worked not only with the state of Ohio's deferred comp plan for Ohio public employees, state of Ohio, county, city, school districts as well, but then also folks across the country from California all the way down to Florida, East Coast to West Coast, in a national call center helping people understand what their benefits looked like, how their pension coordinated with their deferred comp plan, and really trying to help them understand, did they have enough to retire? And then what are the special features of the plan that they should be aware of for as public servants? Because a lot of them retire before a 59 and a half or age 65 that we often think of for retirement age. So how do they navigate understanding their benefits and making sure they have what they need?
That makes sense. I do want to give a caveat, like just that we're going to spend the most of the time today talking about STRS and Ohio public employee. Yeah. And so, obviously we're putting this out there on the World Wide Web. I'm expecting, hundreds of thousands of viewers across the nation to view this. So just keep that in, some of this, there is much similarity. We have clients in 26 different states. We've helped through a lot of these processes. There's differences of all of these plans, depending upon which state you're in. But there are some similarities as well. They're all sharing kind of similar kind of ideas and what it takes to make the programs work. I'd also say that we're recording this in early June of 2025, and the reason that's important, as you paying attention to this, is these plans have been changing. In fact, we're going to talk about one of the major changes that happened recently. But these plans seem to change almost every single year. Maybe not every year, but every 5 years at least. And so, depending upon when you're listening to this, make sure you're aware of that. And and Megan, you're sitting here too. For our firm, you've been kind of our expert on, the public employee side of things. When we have a client that's coming in, like a brand new retiree client, and they have questions about it, we bring you in to answer those questions. A lot of times, we just refer them to you and you take care of them, the whole package, right? But, and so, why is it important? Why are this is our fourth or fifth topic of discussion on our podcast. Why are we talking about this? Well, about would you agree with this? 20 to 30% of our clients or so, one of the spouses has some sort of a public retirement pension or a state teacher's retirement pension. At least in my experience. You agree with that?
Yeah, I think that's fair to say. A lot of our clients, if not both members of the household, then at least one of the members, one of the spouses has a public pension. And so trying to understand how it works for them and their situation, so they're not inadvertently giving up benefits, but also they work enough years, whether it's an extra year to clinch, a little bit extra in the pension, or helping understand, well, which choice do they make? It's a part of the process, this big puzzle but it is a fair amount of our clients that we work with.
Yeah, for sure. So it's important to bring it up, and we thought we'd do so today. Let's just start. I mean, where do you start when you talk about this? I guess let's start with, okay, somebody gets hired into the system, right? Can you talk a little bit about like what choices they have when they enter into public service?
Yeah, so when people get hired into like an OPERS role or a state teacher's role, there's a lot of times a short window when you're first hired in to make a decision about, well, what kind of pension choice are you wanting to opt for? Do you prefer a traditional pension where the pension system itself manages the funds and picks and chooses those underlying investments, and your retirement option or benefit is then based on your years of service? Usually that's a good fit for folks who are going to be in a full career in public service. If you're going to be in the classroom or in the school system for all 30 or 32 years of your teaching, then that may make sense. But folks who come to either those roles later in life or mid-career, there's also options for like a member-directed plan that looks and feels more like a 401k.
401k, yeah.
So they can pick and choose the investments and have some more control. There's a little more flexibility under those umbrellas. So it really comes into where folks are at in their career and how long they think they may very well be in that public service role.
You talked about the member-directed plan, and that is like the equivalent on the private side of a 401k. What are the advantages of that over the traditional pension plan?
One of the main benefits is, as it relates to your options on the back end when you go into retirement, if the other spouse or from a previous work history, you have other retirement accounts and maybe you're not looking for a significant additional pension income stream, you're also able to tailor the investments to what you're comfortable with and how it fits into your financial picture.
Yeah,
Is that fair?
And I like what you said earlier about kind of almost like, what is your plan? Are you coming in there young and you're like, I'm a teacher, I'm going to stay there forever, or I'm a nurse and I'm going to stay there forever in the county hospital, or if I'm, then you probably, I think at least the majority of the times I've recommended go to the traditional route.
Yeah, absolutely.
And then like you said, if you're coming in there as a second or third career kind of thing, and you think, okay, I got 5 or 10 years, and you really don't have enough time to get the juice out of it, like you would in a traditional type way, or a member contribution way.
Or even just to earn enough of a meaningful monthly benefit.
Yeah.
So if you say, well, gosh, I'd rather just have to accumulate a bucket of money in retirement that I can choose how and when I pull the money out of, because it only would translate to maybe a couple $100s. If you're an attorney that was in private practice and then went to go work for the courts or switched over to be a judge, then you may have other things at play where the member directed may make sense for you.
So I guess talk a little bit about how the programs specifically work, if you don't mind. Like contribution amounts, how much do they put in for you and all that? How does that work?
So what's unique somewhat in the state of Ohio as opposed to other pension programs or other pension plans across the country is that in the state, you're not actively participating under public service and Social Security. So when we talk about the contributions made to the pension, they seem high. Well, they are higher, but it's also because it's the retirement, but it's also replacing that Social Security. So for OPERS, most OPERS members are going to put in 10% as an employee, their mandatory contribution, and then the employer will also put in about 14%. That can be different for different roles, specifically public safety or some police and fire type jobs.
Where they've negotiated like a different rate or whatever, if you will, through their contract negotiation process. So 10% for OPERS is the employee put in, right?
Yes.
And then 14% is generally the employer match, so for a total of 24.
Yeah.
Compare that to the private side, because you mentioned employees in the public sector in Ohio don't pay into the Social Security system, right?
Correct.
So compare that to what the typical Social Security contribution level is.
Yeah, so typically for a Social Security, it's going to be about 6.2% for the employee and employer contribution.
So on both sides, right? So about
on both sides, it's an equal amount.
13% or so put into Social Security to make Social Security work on the private sector.
Yes.
A lot of people, I always use the public service, contribution amount as when even if we have somebody who's not in public service who asks me how much, like if they're a younger person, how much should I put in to someday retire? And I said, well, there's 1,000 different variables and everything else, but look at what OPERS and STRS do. They put in 24% of your pay every year with the end goal of getting what? Like, what percentage would you end up kind of, if you worked a full career in the public service, let's say 30 to 35 years?
Generally pretty close to about 80% would be a reasonable amount to
80% of their
final average salary.
Yeah. So, and is that on both programs? I really don't know this answer. So I know I'm setting you up. Sorry if I'm doing this, but are both programs the highest 5 years or no? One is over 30 years and one's over 5 years, right? Is it still 5 years early? Both.
So typically with a public pension, it's going to be your highest average, final average salary for the highest average 5 or highest average 3. It doesn't need to be the last 3 or the last 5. That's a pretty typical combination. I always refer back and double check based on the specific pension, just so I don't misquote to anybody.
I know. Well, you always give that caveat of let's bring the OPERS into the equation to make sure we know what your actual benefit is.
But what is nice about that is it's not always just the last 3 or 5. So if you're working in a full capacity and then you go part-time,
yeah, okay. Got it.
Then it can help average it out still.
And I also bring it up too on the private side to say, Social Security, you're not putting in enough to retire on Social Security.
Not just Social Security, no.
That's why they tell you, the rule of thumb is put another 10% into your 401k or whatever, because Social Security plus your 401k, you can get
close to 23, 24%.
And so that ends up, guess what? If you work 30 to 40 years and you don't take any money out of your 401ks, and you maybe can make that work as well. But of course, on the 401k side, the risk is on the employee, right? They chose good investments, so they didn't panic when the markets went down, all that. So there's a little bit more responsibility on that side of things. So let's talk a little bit about, maybe we don't got to go into the specifics, but can you give me a quick summary of maybe how the benefits calculated? How do they come up with the amount? So they say, okay, your final average salary, right, times a certain amount of years. How many years do they need to get full retirement, right, without any reduction in benefits?
So it tends to be you need at least a minimum of 20 years of service to get a reduced benefit.
Okay.
And then to get an unreduced benefit, there's a whole table, right?
There's
a whole table and a combination of how old you are when you were first hired and then phasing in. And one of the big changes with specifically to the state teachers retirement system, the STRS, is that they've adjusted the amount of years that you need actually in favor of the members for a window of time for folks who may have been right on the cusp of retiring and maybe thought that they had a couple more years to go. Those years to retire without taking a reduction have actually come down a couple years.
I've never seen this.
So it's kind of an exciting time for those members. Yeah.
It is. I've never seen any changes that they made to the benefit come out in favor of the employee. I think it's a lot to do with just, the assumptions that were made as far as what the rates of return and the investments would make and all that stuff that they had to adjust. Because also, by the way, it's now 24% being contributed by, in total. But if you look back 10 years ago, it was less than that. So they've adjusted.
They've had to increase the contribution and then work a few more years to get the unreduced benefit. And now there's a window for a time where folks may not have to work until 35 years. They could, get out at 32.
But it's a window.
It's a window. So it's not forever. It's just a window.
So if you're interested in that, make sure you give us a call or reach out to your advisor and just, find out, hey, does this apply to me? And we can kind of shoot you the information. Yeah.
But generally, you asked about how many years to go. 20 for an unreduced benefit, for a 20 for a reduced benefit, but anywhere between 32 to 35 to get the full unreduced benefit for folks. So it's a career service.
Then a big question I get is, okay, so now I'm going into retirement, I elect my benefit, right? And there's a lot of different ways you can elect, which, if you take the traditional, you can do if you're married, you can do it, joint and survivor pension, you can do it all in your own single life annuity, there's a lot of different options. We won't go into that, but that's where we get involved a lot of times, because we primarily, right, work with people very close to a retirement. So a lot of times that's part of that's part of what you're hiring somebody to do, is kind of help them analyze and kind of test that, in financial planning software and everything, which way is the best way for your family. So now I'm retired, I'm getting my benefit. Let's say I select, a single life annuity or a married filing jointly kind of thing. Talk to me about the cost of living adjustment. Social Security has a cost of living adjustment, right? We heard about that. Talk to me. Do these retirement plans have, is the same amount that you get paid the whole life, or do they adjust?
They can adjust. It's not always fixed. It's not always a guaranteed amount. The cost of living is, it's always it's a tough part with the pension because it feels like you are living on a fixed income. OPERS does have some of a cost of living adjustment, and then STRS, it's discretionary. It can happen, but it's not always guaranteed.
Again, that's something that's changed in the last, time flies. So it's within the last 10 years anyway.
Correct. It was more expected and more consistent to be available,
Yeah.
but they're not as generous with those cost of living adjustments as they have been in the past.
So they just get together and decide whether they can or cannot give
So
an adjustment.
whether the pension can afford to do it from an actuarial standpoint.
OPERS is a little bit more, hey, yes, you're going to get this every year adjustment, but they max it out at 3%, right? So
That sounds right.
yeah, so it's like that I'll give you a great example of this. So in 2023, right? So we had the big inflation year in 2022, and Social Security recipients received right around a 9% increase in their benefit, right?
Because of the inflation.
Because
at the
inflation,
time.
the CPI index was much higher, and so they gave every Social Security recipient got a 9% increase, which was like, if you've been on Social Security for a number of years, the joke had been for a long time that all you do is make less than Social Security because the Medicare costs had gone up more than what the inflation rate was. But 2023 was a banner year for Social Security, cost of living adjustment, so it went up by 9%. So think about that, like just the OPERS versus Social Security, a 9% increase versus a capped at 3%. That's a big difference.
Yeah, and over time, it makes a difference from how that pension income can keep up with the cost of goods and maintaining a certain standard and comfort level in retirement. So that's where often the pension, while it can be a really significant building block, a foundation for retirement income, we shouldn't always account to solve all of our need. And so having a plan for supplemental options is really helpful.
100%,
So that way,
yep.
as things do change, you're able to have flexibility to meet those changing circumstances.
And that's where, a lot of employer, that was part of your work that you worked in the 457, right? Plan was that's an additional way that the employees can put money away in a tax deferred type of situation. That again works more like a 401k, and on top, even if they went with 100% traditional, they still can elect the deferred comp plan, right?
Correct. So it's something in addition that's available by employer by payroll deduction, kind of like a 401k. Creates a separate bucket of money that you can pull money out of at retirement, regardless of how old you are, which is a unique benefit for public employees. A 457, you don't have to have a certain age to access the funds. So if you're a firefighter and you retire at 48 or 50, you have access to that money.
Versus like an IRA or 401k. 401k, if you leave in a 401k age 55, for most companies, not all.
And then 59 and a half is the common
IRAs,
age
yeah.
for 403bs and IRAs and 401ks.
And teachers have access to 403bs as well. Those
Correct,
are
but
same
if it's a public school, they have access to a 457 too.
as well.
So most school districts have opted in for that. So teachers have a little bit more flexibility on which options that they choose. But the deferred comp is a great way to save additionally from your paychecks over time to create a separate bucket, or especially when you go to leave service, if you have accumulated unused sick and vacation time, you can defer a good chunk of that if you're tax smart about the timing of your retirement, to not only control the taxes on those lump sums, but then it creates an additional kind of piggy bank to access when and how you want to, but it gives the participant or the retiree more options about how they use that instead of just paying all the tax up front and then trying to figure out a plan on the back end.
It's really, really good advice. And again, one of those complexities of the public employee retirement system that a lot of people just don't know. And you shouldn't. You should be focused on, teaching the kids or running the city as best you can. Doing your job or whatever you can, your public service.
Don't let me do traffic design. I'm going to let the city handle that.
right. And we want people to hire us, right? So we talked about, this was something that one of the major reasons we wanted to get this right now was probably the largest change we've had in our careers in regards to the coordination of benefits with the public pensions and Social Security. Can you speak a little bit about that?
Yeah, so it's a significant change. For many years, upwards of almost 40 years, when people, either spouses or individual workers who had time in both a public pension, like in Ohio, that was outside of Social Security, and folks that worked under Social Security, those benefits were coordinated. Social Security benefits were reduced, sometimes significantly, depending, or sometimes it was a small adjustment, but it was a lot of complexity that ultimately reduced assets and resources available to people in retirement, and that has since been corrected or mitigated. The Social Security Fairness Act removed the government pension offset and removed the windfall elimination provision. Everything has to have an acronym, but
OPERS, STRS.
STRS, the WEP, the GPO, but it helps now folks understanding that there's income that previously we weren't anticipating in the mix is now available, or for folks who are already retired, retired teachers or retired, county employees, they may have access to a survivor or a spousal Social Security benefit when they previously didn't.
Yeah.
So it's really to the members' benefit, allowed for additional income to be coming in. It's just knowing, is it worth waiting on hold, or is it worth making an appointment with the Social Security office and trying to help folks navigate that? It's added a positive complexity back to the planning process.
Yeah, if they were already taking a Social Security benefit, then it was, I think for the most part, those are already calculated. It's only if they didn't bother to file or whatever because they were waiting, or they said it was eliminated, they weren't eligible.
They were never eligible. So why? It's only so much fun to wait in, on hold with the government phone line or anything. But for folks that need,
and of course they're overwhelmed because of this too. So they're
correct. But to Social Security's benefit, a lot of those have already been calculated and implemented, and now it's just coming back to folks who fall outside of the typical scenario, who maybe haven't applied yet because they weren't eligible previously, but now they are, or just for folks looking at approaching retirement, reconfiguring. Okay, well, what can I expect, and how do we best strategize to best help your family?
So that was a huge windfall for a lot of our clients. It went back all the way to January 2024, so a lot of people got a big check that they weren't expecting. That's always
some
fun.
Retroactive benefits. Yeah,
that's always fun. Let's talk just a few minutes about our STRS OPERS benefits. Are they taxable?
Yes, so pension income is going to be taxed both at the federal level, and in the state of Ohio, we tax retirement income.
A lot of states don't, but Ohio does. Apparently.
But Ohio does.
Yeah. but we're in Ohio again. See, this is Ohio versus if you're in
and
one
then
of those
Ohio
other
in
states,
2025 does. They can always change that down the road. But for now, we should anticipate paying as best we know. It's
they
taxable
do have
income.
a few tax credits. I mean, I don't know if it's bothered telling it. It's like what, $250 to $300, $200 to $250, something like that per individual. I think if you're over 65 and you're getting retirement income,
you get a little retirement income credit.
Yeah, you get a retirement income credit, right? And so I think it can make a slight difference. It's not going to make too much of a difference.
Yeah.
It depends on your income, I guess.
But there are benefits. We didn't talk about this ahead of time, but there are some specific benefits, like for public service, public safety officers. So firefighters or police officers, if you fall under that public safety officer umbrella, there is some options with a deferred comp to pull money out tax-free to pay for health care or long-term care insurance premiums. And so, or to help segment that within your pension income. And there's just specific benefits available for public safety officer folks.
They also have a lot of folks have a drop program, right, where it's an additional where you can they can max contribute to a plan for a 5-year period of time, I believe it is. And
so allows the drop
kind of catch up, almost like a catch up right into retirement. You can put a bunch of money into there.
Yeah, so it allows you to segment your original pension accumulation, your original pension benefits, and then to have a deferred retirement option, a supplemental retirement benefit accumulate to retain folks who might otherwise retire,
Yeah.
and to
They're like,
retain
"Why- I'm up-
retain that experience.
I'm at my 35 years. Why would I keep going?" And like they gave them this option to kind of, I guess, give them incentive to stay on for a little bit longer. Anything else on the benefits that I'd missed that didn't ask you about that you think is important to talk about?
I think we covered them all, or at least that come to mind right now.
The only thing I was thinking is I've seen this before where like happens a lot with teachers that maybe taught in a different state,
Oh, okay.
or if they had military service or something like that. I get that all the time. Should I buy more? Like you have the option to buy in, like up to a certain amount of years of benefit.
Yeah. So when we're looking at like approaching retirement, especially if you've had military service or maybe you taught in a different state, a lot of times that'll come up with teachers who've taught in different systems in different states, is you're able to either collect to gather up those years of service to aggregate it, or even in Ohio, if you had some years under like school employees retirement and state teachers retirement, or some under OPERS, you're able to aggregate those pension years together or retire individually, whichever is more advantageous. But especially if you've cashed in previous years of service or you had military service, you're able to buy that time.
Mm-hmm.
So there's always the cost benefit analysis. What's it take to purchase it? If you have some of that deferred comp account, that 457 we've mentioned a couple of times, that's a way you can use it to buy some additional years of, you can buy that at purchase of service credit, those additional years. And it's a tax smart way to do it because you're moving money from one account to another. You don't have to pay tax, but you buy the additional years. It can be helpful, especially for for elected officials. They're able to buy credit as well. It can be a meaningful way to do that. Depending on how many years you're trying to buy, it can be a hefty price tag because it's actuarially computed now. But it can be helpful if it brings you up to a threshold to get a little bit more of that, an extra couple years of service. It can be meaningful for folks. So I wouldn't rule it out entirely, but there's usually some ways to plan and account for it if it helps folks.
Usually, it's important to do it as early as you can. If you're going to do it, if you think like, right? I mean, it's better to do it. It gets more and more expensive as
The
you
more
get
and more
older.
you wait.
Yep. And if the math, it just depends. Everybody's different. It's hard to do this in a situation
In a
like this.
vacuum, yeah.
Yeah. Like, just talking to who's listening, but like most of the time when I'm doing this, I have found that it's worthwhile to buy the years, unless at the end of the day that is not a meaningful pension to you and your family. You know what I mean? Then if it doesn't move the needle a lot, but if you have somebody who wants to retire at 35 years, I can guarantee you they would love to retire at 31. Like, I just know I've not met too many people who are like, I just want to keep going. There is some. There is definitely some.
They're out there.
But, a lot of times you get in that 30 years, like, man, I've been doing this a long time. I'd like to find a way out. So, man, I wish I would have bought those years of service years before. It would have been worth, more for me to do so. Anyway, just thought I'd throw that out there.
Yeah.
Thank you for your time today.
My pleasure. Thank you for having me.
Very informative. And I very much appreciate it. I think it's timely to talk about these benefits, especially with all the changes that have recently happened. So, very quickly, this is called Toast to Retirement, as you know.
Yes.
And as such, we get to, usually I have the guests pick the beverage of choice that we will toast to. However, Megan is very, very, very busy, and I wasn't able to coordinate with her what she wanted to do.
So we chose a thematic answer.
Yeah, we Googled it. Megan, what's the state of Ohio beverage?
I understand it's officially tomato juice.
Yeah, that's, I love a lot of things about Ohio. Buckeye.
What were the other choices is my question.
There's other choice. It was the state of Ohio.
No, but how did we end up with tomato juice? There has to be other.
Originally, like when yeah. I don't know. Couldn't it have been anything ethanol? No, that'd be. That's probably the gasoline choice or the fuel choice. Yeah. So I don't know. I don't know how we came about that.
But alas, it is.
I think we're setting a something brand new for both of us. Megan has actually never had tomato juice in her life, correct?
maybe 99.8% sure. I've never, maybe a sip of V8 at one point, free plug to V8, but I just, I don't know if I've ever had tomato juice.
So I can't say that because I've had Bloody Marys, but I know for sure I've never had just straight tomato juice, and I'm quite positive I'm not going to enjoy it very much. That being said, we always do a toast, and we're going to try this. It seems to be the theme of this podcast is always some sort of disgusting juice. Just kidding, Tony. Just kidding. I know he's going to watch this. They're delicious. So let's raise our glass. Here's to public servants, the quiet heroes who keep our communities running, our streets safe, and our futures bright. May your own retirement be just around the corner, full of freedom, fulfillment, and absolutely no mandatory meetings. Cheers.
Cheers.
Cilantro. Yeah, you know what it tastes like? Cold tomato soup. I have had tomato soup.
It does taste like cold tomato soup.
It's
not bad.
Soup. Everyone's sitting there going, you've had tomato soup before. That's the same thing as a beverage, just put it in a glass. Okay. Gazpacho and not tomatoes.
Yes, it is.
Okay. Thank you for watching. We appreciate your time and our ability to goof off for a few minutes here. If you're a client of McCarthy Cox, we very much appreciate your trust and confidence. Please reach out to us if you have any OPERS or STRS questions. We have a great resource here with Megan. Thank you so much, everybody. Take care.
Thank you.
Feel free to share with friends and family, and follow McCarthy & Cox Retirement and Estate Planning Specialists on Facebook and LinkedIn. Check out the podcast tab on our website, www.mccarthyandcox.com, where you can find links to all the episodes of Toast to Retirement. Certain sections of this commentary may contain forward-looking statements based on reasonable expectations, estimates, projections, and assumptions. Forward-looking statements are not guarantees of future performance and involve certain risks and uncertainties which are difficult to predict. All indices are unmanaged and are not available for direct investment by the public. Past performance is not indicative of future results. This podcast is provided for general information purposes only and does not constitute either tax, legal, or financial advice. Please consult a tax preparer, professional tax advisor, financial advisor, or lawyer regarding your specific circumstances. Investing involves risk, including the loss of principal. No strategy can guarantee any objective or goal will be achieved.